Back to another episode of Talk 21. It's me, your host, Sam Geneva, alongside my co-host.
Hi, I'm Dave Vitti. Welcome back.
So what are we talking about in this episode?
The first thing that we have to talk about is how you guys doing?
Doing
We're good. We're good.
Yeah.
Weather's
Dave
finally
is
coming around.
Dave is supporting a beard now.
I am.
Yeah.
It's
Is it a
coming in.
new look or just?
It's a little bit. Let's be lazy, but like
Well, salt
try
and
to
pepper,
do it. A
yeah.
little bit of salt and pepper. I feel like I look a lot older with a beard, though.
I don't know. Depends.
Yeah, I think so.
But we do have to talk about a certain number that came into the news as of late. It's called 66%. What does that mean, guys?
Talking about capital gains now. That's what we're doing.
That's
Yeah,
what we were
rolling
doing,
right
Dave.
into it.
Well, yeah. So this is the biggest, hottest topic probably in real estate right now. So they're talking about proposing an increase in capital gains to be taking effect in June 24th. So it seems like there's a little bit of a flurry and a mad dash for people to start moving real estate and trying to close before that. Yeah, I think it's horrible.
Well, so one thing we got to talk about. It's proposed.
Yeah.
It's not 100% that it's going to happen, but there hasn't been much update on it. So we're kind of all sitting on the sidelines. We actually just called a good friend of ours, who's an accountant, who suggests if you're selling. Well, I mean, once we know the update of what's actually happening, you should be contacting your accountants for ways to kind of deal with the change when it comes into effect.
Right.
But it hasn't come into effect 100% yet. But
It's
it is
proposed. It's
for
definitely proposed.
June 20.
So any real estate that sells on or before the 24th will be exempt. After the 24th or on the 24th and onward, it will apply. So I think if you have a holdco, it's all in effect. If you're personally holding real estate, you're taxed on the new amount after $250,000. Before the $250,000, it's still at the 50-50. If more than 250, it's going to be at the 66.7, I think it is.
66.7.
66.7.
So it's going up 17%.
How could they possibly do such a massive increase like this?
It's definitely nothing good for anybody here. Like, I mean, especially if you're if you're just trying to build your portfolio and hoping for some gains for real estate appreciation, this is kind of putting a damper on it. Like you're dealing with all these tenancy issues and holding on to residential properties to make money and dealing with tenants and all the legislation that doesn't benefit landlords with the matter, and then they're taxing you more when you go sell it too. So it's definitely difficult, and it's hard to get investors to buy residential real estate for investment purposes.
Yeah,
They're saying there's
This right now, it seems like it's really, really tough. They're not really looking at.
Okay, so Sam, do you think that this is it's almost like a stake to the heart that is now the government saying, look, investors, you want to invest, you just simply can't anymore.
or it's going to slow it down.
Yeah, like I mean, with the economy that we're in right now, with all the other stuff that's going on, makes things more difficult. And to add this on top is just another barrier that people start thinking.
What are we doing here?
Yeah, like before all this happened, it was like invest your money in real estate. It's the it's going to grow for invest for the long run. It's always going to grow. But people are thinking now it's like. I invested all this money. Now when I go sell, they're taking everything away.
They're taking more.
I mean,
from
obviously, you're going to need a really good accountant.
Yeah,
and
so
bookkeeper to
there
maybe delegate.
may be some loopholes to this. You might want to speak to an accountant. I mean, it varies between if you're holding the real estate in a hold company or if it's personal. So yeah, I would definitely talk to an accountant if you're wanting to make a move regarding selling or buying, and see how it implies or implicates your income stream, or what your future outlook is on investments.
Now, as realtors, do you think that something like this is going to now put a stop again on you selling someone an investment property here?
Yeah, of course. I mean, it's already been a really big struggle dealing with the tribunal and dealing with tenants that have more rights than landlords and trying to get tenants out of properties or raising rents. So that's already put us a little bit of a slowdown on residential investment sales. Now we got the capital gains. I mean, yeah, of course it's slowing things down. I mean, it feels like that middle class sector of our world is getting squeezed and crunched. They're just thinking, why am I doing this for if there's not enough of a return? Why am I dealing with headaches with tenants when I can't benefit in the long run? They're taking away the profits that we work hard to achieve by dealing with the hardship of running a residential property with tenants.
Yeah, because it's 66%.
Yeah.
So basically, you're dealing with all of this headache to get what back?
Exactly.
And you're investing a lot.
Yeah, you're investing time in managing the property and then dealing
But
with
you're
the
investing
costs.
money.
But
lots
you know
of
what?
money.
At the
Lots
end of the
money.
day, when there's change, everybody's in a panic, right? And we're talking about this and we're talking about that. At the end of the day, we don't know. We don't have a crystal ball.
But
I'm sure there's going to be, everything's going to settle, and whatever happens, happens. People are still going to be buying real estate. They're still going to be buying and selling.
Yeah.
So it's just change. Change for everybody is difficult. Yes, they're going to be maybe taking more money out of your pocket, but at the end of the day, I'm sure if you have a good accountant, there's going to be ways. You know, maybe people aren't going to be buying properties under their own name anymore, and they're going to be opening more numbered companies.
But I think it's affecting. I think it's affecting everybody. But you're right. There's definitely ways
around it, right?
The only thing is we're kind of complacent here. We seem like we take these changes, and they always seem to be adverse for us
And negative.
And so anyway.
So
we'll
so
see.
now,
But
now we
right-
get let's go to another thing. Like we're staying on topic because capital gains obviously in the tax bracket. Obviously, it's taxes. What do you guys feel about this new carbon tax hike that's been happening, affecting our gas, affecting everything that we
Oh,
have? Yet
it's
another increase in tax.
ridiculous.
How do you feel about that?
It's the same thing. We were complacent.
But-
These adverse things happen to us, and we get taxed more, and we just accept it. All of a sudden, like overnight, we're paying like so much more in gas.
What is carbon tax? Where does
So
that,
what is the
where-
carbon tax?
What is the carbon tax? Where does that go? It's just
well,
a new
it's
tax
for
that
the
they
environment, apparently.
made. Yeah,
I don't
like,
understand how.
It's just for me. It's just like I don't know. It's like just a total gimmick. Like just another way to tax us on where's the money going.
Correct. And then we have inflation when you
Yeah.
go to the grocery store, because then this affects the truck drivers and everything else.
Everything.
So my question to you guys, because maybe you know more than I do, why did they feel like now would be a good time to place a 66% increase on capital gains?
There's never a good time, but I don't know why they did it now. I mean, at the end of the day, maybe they're trying to slow down inflation. I'm not sure. The rates
the
have
economy.
the rate.
Is that possible?
the
Capital
rates-
gains increase by slowing down inflation?
Well, I'm not sure. I'm just saying with maybe it might slow down the amount of activity and might maybe start bringing down inflation. I really don't know. I'm just saying we're experiencing a lot of changes, and a lot of this was to slow down inflation, but it hasn't done so. So I don't know. I'm not sure if this is more implementations
But
to achieve that goal.
If you talk to economics, like the side of it sector, they're saying that inflation is coming down. So that everything that we're hearing is like
Yeah.
we don't know what to believe. So there's a couple of guys that I follow their accounts, and they're always updating and talking about like the economics and this and that. So rates should be dropping, but they're not. So they're definitely trying to slow down something. I think a big factor has to do when they drop rates. They're scared that everything's like real estate's gonna
Pick up again.
really like shoot up in price.
But
I-
now
I-
with the possibility of a decrease in interest in June, possibly. I mean, this is obviously speculation.
Possibly, yeah.
I don't know if it'll be enough, a quarter point, if it drops, to stimulate anything.
I think we're gonna start seeing more listings hit the market, and people are gonna be excited to see that it's going in the right direction. So it will cause excitement. I think there's gonna be more transactions, but is the price gonna jump from 750 to 800? I doubt that. But there's going to be it's an encouraging sign.
Of
People
course.
are going to be excited. People are waiting for that.
So in the news right now, that actually just came out last night, they're saying that home buyers are on the sidelines waiting, and it's the Gen Zs and Gen Xs that are actually forcefully going out now to get property right now. Now, when the rate drops, do you think there's going to be a massive, like all those homeowners are going to start flooding the market?
I mean, that segment that's attracting that demographic is already kind of busy. We're starting to see multiple offers on entry-level homes already.
Yeah.
I don't know what a quarter point's how much of a difference it really going to be. Like it's never going to be at 2% anymore. So
No.
You guys are seeing bidding wars? Did you just say bidding
there's
wars?
Oh,
yeah,
everywhere.
there's bidding wars.
Everywhere?
Well,
like
I mean,
entry level
entry-level.
freeholds are busy.
What qualifies as an entry level?
Entry level is
Anything under
anything
$1 million?
like even $1 million, like $959
entry level?
anything under
for
a million
freehold.
and under.
For freehold, we're not talking condos. We're talking freehold.
And
Like
condo would be? How much?
condos, like I mean, condos are
They're all over the place.
significantly less, right?
Yeah.
Like you can get a 1 bedroom for like less than 1,000 a foot, like 800 to 1,000 a square foot.
Really?
So you could probably
So
get
in and around 650.
depends, even cheaper. Like if you're looking at a
Really?
bachelor
Yeah.
or a 1 bedroom, they're depending where you are. But I feel like the condo market's not as strong as the freehold
No, it's
entry level. So
definitely softer.
anything like freehold with regards to towns, semis, and full detached homes, entry levels, I would say maybe 850 to like $1.4 million, depending where you live.
Yes.
They're all very busy.
So now that we've discussed capital gains and everything else, the last segment to this episode is we touched on freehold, we touched on condos. In the current market, with the current situation that's happening right now, where are you guys banking on? Are you banking on the condo market taking us to another level, or freehold taking us to another level? Which one do you think is going to start to prosper as the summer comes closer?
I think it's all gonna come up slowly. I think maybe the condos may see an increase because I mean your money goes a little further.
Yeah.
But there's a lot more to choose from. Like there's so much inventory on the market. If you're looking for a condo, you have a lot more to choose. The problem
Yeah.
is with freehold is the inventory is still at an all-time low.
Yeah.
So
It's
people
just,
that
it's
are
just,
looking to
there's
buy,
more of a demand for it.
there's a high demand, but not enough properties, right?
So, but I think if you're looking for a better deal, you might get a better deal on a condo.
oh, for sure.
So
for
if
sure.
you're looking just purely as an investment,
Not as an investment, to live is a better deal. Investment, I don't think it is, right?
even as an investment, aside from what we've been talking about, capital gains and all that, but rents are all really high still.
Yeah.
So you can get a condo for less than you could before, and so the returns on the investment with regards to renting it might be profitable, might be good for now because rent rates are so high.
But that's the problem. It's been said, Dave, that if you own a condo and you're renting it, even at $2,800 a month, the tenant, the landlord, is really not making that much money.
No,
He's not making
So
anything.
you're basically breaking even.
it depends. You're like sometimes you can't look at the return on the investment today. Like you can. It's a number that you can use, but you're always looking forward to the appreciation of the asset too. So right now your return on the investment might seem lower, but it's not going to be. It's going to be significantly lower maybe than even a freehold house because freehold houses are so much more money. So you might be doing okay even on the short term, but because the condo market's a bit soft, in 10 years from now, that might turn around and be more expensive than a freehold house that's already kind of somewhat inflated already. That's all I'm getting at. It's hard to say. We don't have that crystal ball to see where it's taking us, but there are better deals for condos right now for sure.
You heard it first from Dave. I'm obviously indifferent. I don't know how condos are going to make a killing moving forward because I think when new developments start to take off, I think condos are going to become an afterthought. That's my 2 cents because condos is difficult.
no, but
It's
you
high
know what?
They're talking about high density living everywhere.
People need. You know what? It's all about affordability, Stefano. If you can afford only 600,000, your only option is a condo. There's nothing wrong with that.
But you're only getting a 1 bed plus den.
Well, you know
sometimes.
what? You make your equity and you move up, right? That's how people do it, right? You start there, and then you in 2, 3, 4 years you move. Markets always have gone up. Normal market, healthy market is 5 to 10% a year in real estate. So you make your money in 2, 3 years. You sell it, you move up to a bigger unit.
So you're saying we have to have our ducks in a row?
You have to always have your ducks in a row, buddy. Always,
It's hard
buddy.
to say. It's hard to say what's going on. We're just saying that the freehold market's pretty strong, especially at the entry level. The $2+ million, $3 million properties not so busy, not so rushed, and then the condo market seems to be a bit more flat. There seems to be more inventory in every building I look at, and there seems to be pretty good deals. So
Yeah.
I think the best deal is where people can find you. That has to be the best deal.
You can find me on
At
Instagram at Sam Genova Real Estate.
And you can find me at C21 Fine Living Realty.
Do you guys remember back in the day when Dave could not get that, and now he says it in a second?
Finally, after
Yeah.
episode, what episode are we at?
500, 600.
Oh, well,
All right,
what are you
guys.
gonna do?
Okay.
So we'll see them next time.
Yeah,
Yes,
we'll see you on the next one.
next one.
All right.